Hi everyone, this is Michael Teo here, and just like you, I love to learn how to trade and how to do stock investing. Sounds very difficult, but guess what? It is really simple once we have the right experts, the right mentors to actually offer some tips on guiding us through, which is why I'm so passionate to be involved in this Kenanga KenTrade challenge. Now with me here today is a very impressive young man. Not only is he young, he is actually the director of LifeChamp, and he has spoken and coached thousands of people on stock investing and trading across the nation. And with me right here is Choo. Thank you again, Shane, for joining us here.
Thank you for your kind words, Michael. Hello everybody.
There you go, young and impressive. So Shane, thank you for being here. I need to shake your hand, young and vibrant person. Thank you. So this is the KenTrade challenge. We are trying to get as many people as possible to really realize their potential in stock trading and to do it in such an interactive environment like the simulations that KenTrade will provide. Now, I'm talking to you because you have coached thousands and thousands of people across Malaysia on how to do stock trading, stock investment. So here's my question to you, just really fast to the point. What are some of your tips? If you could name the top 3 tips that people could use when they want to pick the best stock?
Well, for me, to pick the best stock is very important for you to understand the market dynamic. So tip number 1 would be to understand which sector will perform well in the upcoming quarter or year. So it's really important for you to understand the world economy, and then you think about which sector will really grow, and then in that sector, there will be a lot of industry, a lot of companies that will be benefited from the kind of movement in terms of the market dynamic, and then they will grow. Because in different economic cycle, there will be different industry that they would have the greatest momentum to go forward. So firstly is understand the sector when it comes to picking a stock. And second tip would be to understand which company in that sector has a sustainable competitive advantage, because if they have a sustainable competitive advantage, their business will likely to last longer, and they would remain competitive in the market, and they have an edge over the competitors, and then the share price will have a sustainable momentum to go even higher. And third tip is to look for companies which is the most undervalued in that sector, in that industry, and has the greatest growth momentum. So you need to think about what are the key industry drivers that can drive the company forward, and then if you invest in that company, then your return could be compounded even faster.
Right, looking at the stocks or the companies that are represented in the stock in that sector. Number 2, you're looking at the company's longevity. In the sense, how is it sustainable? How is it remain relevant in the market? And the third tip that you mentioned, can you repeat again? What's the third tip in summary?
It's to pick the undervalued company. Because if you pick an undervalued company, you're assured of safety of principal, safety of capital. And when it's undervalued, when you buy, you know that you will definitely make money from this company. And then if the company has a growth factor, which has a key industry driver that drive the company, you know which are the whether it's economic factor or whether the company has great quarter performance, quarter report performance, then you will maintain the kind of sustainable factor to push the share price into the next and upcoming quarters.
Here's my question to you. How do you know if a company is undervalued?
Well, firstly is you need to understand whether the company has consistent profit growth and whether they have a consistent revenue growth, and then you forward project it and see whether and try to estimate what is the intrinsic value of the company. But different people will use different measurement in terms of understanding the intrinsic value. Some people use discounted cash flow model, while others use other intrinsic value calculation models. If you want to understand the value, whether the company is below value or not, and then generally we look at the PE ratio, we look at the price to book value for a certain industry, and then we look at whether their cash flow is growing, their revenue and profit is growing, and we project.
So here is something that I want to ask you. What are the top 3 tips that you could provide for a newbie like me, getting into stock trading, getting into stock investment, but I am scared like crazy? How do I change my mindset? How do I become more confident that when I pick that stock, when I'm in that challenge, I know what I'm doing? Any tip, please?
Yeah, I guess it is very common for people to get a bit more fearful when it comes to market. Maybe they have been conditioned by the TV, by watching a lot of medias or shows showing people that they jump off the roof after they fail in the stock market. But well, the first tip to avoid going to that kind of scenario is you must understand yourself well.
Right.
All right. And in the stock market or in Bursa, there are a lot of instruments for different people. Some instruments comes with higher risk. Some instrument comes with lower risk. So when you want to understand yourself, there are three things that you need to understand. Firstly is your risk preference.
Right.
Okay, like how much risk can you take? So if you are more risk taker, you can go for more leverage instruments like maybe warrants or options or derivative products like futures. Or if you are risk averse kind of people, you can go for lower risk kind of financial instruments like cash money market and stuff like that. So secondly, you need to understand about your capital. If your amount of capital is huge, then there are more asset classes you can choose from. If your amount of capital is lower, then there's limited amount. There are other kind of assets that are suitable for you. And third thing is your time horizon, like how long you want to stay invested. There are certain instruments that are more suitable for longer time frames. Certain instruments you cannot buy and hold. You can only do like trading. So if you understand yourself well, you would not be fearful because you know what kind of instrument is suitable for you, what kind of risk is suitable for you. So you can go to sleep with a peace of mind because you know that either way, if the instrument or in the security didn't go the way that you want, you can still sleep very soundly because you are protected. The second tip that I can think of is to understand the market. You must know what moves the market, what are the market dynamics, what are the factors that can cause the change in supply and demand and change the market, like what is KLCI and why do people invest.
Know the very basic.
Very basic. You don't have to know. You don't have to know very in-depth economic factor, whether the natural disaster. These are the common things that will move the market. Okay?
Right.
At least must know this index, what does it do? Okay. Right. So you know a bit of a market, so you are not fearful with the market.
Right.
Yeah. So the third thing is understand what kind of security you are trading. What kind of security are you investing? Understand the instrument. If you are trading a warrant, what is a warrant?
Yeah.
If you are trading a stock, what is a stock? And what does the stock do?
Right.
If you are coming from investing point of view, you must at least understand the business model, who are their clients, what is the cost structure, where are their assets, and then who are the management, and ultimately is what is their the financial performance, what is their past financial results, and what they think the financial result will go for. Because if the company doesn't have good earnings potential, chances are the stock will stall and it will not have the momentum to carry forward.
Right.
Yeah. So understand three things: understand yourself, understand the market, and understand what instruments you are trading.
I like that. The way how I would sum it up for all of you watching this right now would be, number one, to beat that fear, you need to conquer yourself. You need to know what's your risk appetite. You need to know what is the amount of capital that you're willing to invest in. Second way is, of course, getting to know the market forces, getting to know what are some of the external forces that could control the market. And I would say the third factor is really understand the company, or I would say the counter that you are buying, that you're investing in. I think that's very important.
Yeah, but understand these three, I think you will not be so fearful. I think you will have gained the confidence to invest safely in the market.
This is what I would say, Shane. It's confidence through clarity. So now here's the challenge, Shane. You have coached thousands of people, but they can learn as many knowledge as they can about stock trading or investment. Problem is, once we have made a bad trade, how do we recover mentally, psychologically? Do we just give up, or how do we recover from that? Golden question.
I think a lot of people would have burned money in the market before. There was a mentor who told me that if you make money in your first trade, then the tomb is just right next to you. So if you lose money in your first trade, it's no risk, because that will teach you to become a better trader or better investor next day, because you will learn the lesson of your loss. Okay, and be more careful when it comes to investing. But there are certainly a lot of people who got into that losing money, burning their money. So what is more important is how they can bounce back.
That's right.
In my opinion, if you know that it's a bad trade, just cut loss and realize the loss. And psychologically, just take a break because take a break doesn't apply to losing the trade. If you win a lot of trades, you should also take a break because when you win too much, you'll be overconfident, and then you think the next trade you're going to make it, and then you would just be more careless. Your self-defense will go down, and then you would just pick a trade that would potentially go wrong. So if you lose a lot, just take a break. Don't touch the market for maybe a month or so. When you gain back your self-confidence, only go back to the market. Secondly, you may want to keep a journal. So next time when you do trading, you keep a journal of how you can keep track of your trades. So sometimes we may have a blind spot. When you do a certain trade, we may not see it, but keeping a journal will help you to uncover the blind spot. For example, after you do a journal, you can uncover. Every time I trade during this hour, I tend to make a bad trade. Or every time I trade this instrument or this stock, the trade will usually go wrong. So you will identify a pattern of you making mistakes. Then you would know. You understand your performance. You understand your strategies. So there's secondly, and thirdly is just understand that if you take stock trading as a livelihood, just understand every time everybody will have a drawdown period, and the drawdown period is just a cost to run your business. So in any business we have costs, right? So in trading, losing money is just like a cost. And then you must understand that trading or investing is not a sprint. You cannot make quick win very fast. It is a marathon. So you must have the stamina to run. Must also understand that you don't have to be right all the time. You just need to be profitable. A lot of people, they want to be right because what it means by being right is that I make money every time. But to be profitable, you don't have to make money every time. You need to cut loss fast and let your profit rise. So you just need to be profitable. You don't need to be right. Just understand this kind of principle.
I like that so much. I think that really sums it up, really. It's not about making the right decision all the time. It's about being profitable. And sometimes, you win, sometimes you lose, but always make sure that you are profitable all the time. I think for all of you who are joining the KenTrade Challenge, a very good reminder as well. Think about profitability instead of like, oh my God, I've just lost this one trade. Oh goodness, there I am, I'm going to retreat. I think it's all about bouncing back, and it's a marathon.
Yes,
Great. So when we get into stock trading or stock investment, as an eager person waiting to make an impact in the market, especially through this KenTrade Challenge, I've always been thinking, is stock trading or investment, are they a wealth accumulation strategy or are they a wealth generation strategy? Maybe you could share your opinion about that.
So there's a vast difference between trading and investing, right? Investing is like you invest in the asset and then you want the asset to yield you return over time. So trading is different. Trading is a shorter term. So trading is you see which security has opportunity. You go in, you buy low and then sell high. You realize the profit in a very short term. So investing is you invest on a very long term basis. You invest for the income, you invest for the dividend, and then you let time to help compound your money.
Right.
So I would classify it as a wealth accumulation strategy. So you let time to compound your money. But trading is different. Trading is you try to time your money and flip it as fast as you can. Right. So I would see it as income generation strategy or wealth generation strategy.
One last question for you. I'm a newbie. Here I am experimenting with the Kenanga KenTrade Challenge. It's my first time. I'm very excited yet nervous at the same time. What would your advice be for a newbie like me and many of us watching this right now? How should I prepare to go into stock trading?
Okay, well, first and foremost is you really need to get yourself educated. So one way is, of course, to read up more financial materials. Okay, change your habits to be, instead of spending money in shoes, spending money in shirts, why not invest a little bit in your mindset, in your education, so you can be a savvy financial investor. So when you have the education, you have the knowledge, you have the confidence, and then you can invest. You may read some books about strategies, or you may learn from gurus about strategies on how to invest in the stock market or how to trade the stock market. So the next thing is to test your strategy, be familiar with the performance. So I think I want to applaud Kenanga for coming out with this amazing challenge. Like, this is the third time they do it. And then I think KenTrade Challenge is an amazing platform for you to go in and test, because it provides a risk-free platform for you to test strategy, be intimate with your performance and see whether it works or not, because they were going to give you virtual money. You're going to practice with virtual money, and it doesn't cost you any single cents. Okay, whether you make money or lose money, it doesn't cost you.
It's the experience.
Yeah, it's the experience that counts. And when you accumulate that kind of experience, and when you go to real market, you will have more confidence, and that's where you can make it.
Excellent.
Yeah.
Thank you so much, Shane, for your time. And this is one of our insights that we'll be sharing with you as part of the Kenanga KenTrade Challenge. Now, everyone can trade. You just have to seek and learn them up. This is Michael Teo here. Goodbye, everybody. Take care.
Yeah.
Thanks again, Shane. Bye.
Yeah, goodbye.